Yeah, everyone, just doing a sound check here. I wouldn't say 1050 is futures are ripping, but that's an interesting perspective. Yeah, we'll get started here in just a minute, folks. Thanks for coming tonight. Appreciate it. Welcome everyone to the Kendall Report. I'm Bob Kendall. We're a little bit after 8:15, about 8:25, I guess, as we're getting started here. A lot to cover tonight. We continue to see these markets just whipsawing back and forth. Terrible day on Friday, big day on Monday. But, the title of this is the OmiCON over. So they basically conned us all into believing there's some kind of new variant, the world was going to end. And that was the narrative that the news lines pushed, got the algos involved. Everything looked terrible. We traded down to right to the major support that I've been talking about. 44.92 was the low. 94.97 is that key level down below. I'm going to show you a couple of things tonight where the patterns are still, some folks might think it's over. It's not over yet, but I think there's several more days of consolidation and things to go through. What did we see yesterday? Airlines. I mean, I don't know how it finished. I remember seeing UAL, United up over 10%. All the airlines were up for the most part. So all of a sudden, everything's back. Everybody's going to travel again. Interesting dialogue that we have to go through when you have Tony Fauci running the country and the stock market now, because he came out and said, oh, the Omni variant may not be as severe as we thought. Well, he already knew that because that's what the South Africans already told him in the first place. But you know how it goes, right? So this is just some realities of what's going on. Meanwhile, the markets are gyrating and money's flowing in and out and in panic type action. And what I've been telling you is the volatility monster is going to be around for a while. Is at least another 3 to 5 days. It takes a while to get a contraction in volatility again. We're still seeing these big ranges. I think on the futures we had a 31 low, a 45.31 low overnight with a 46.11 print high. So we had almost a 100-point range on the S&P. I can tell you, you know, many of you have been around for a while. I remember when you could go, you know, a long time not seeing a 100-point rally in the S&P, not even to talk about having one intraday. One of the things that I think is in the background, we did see some steepening in like the 210s. I'm going to go through the details on the Treasuries, but everything kind of flipped, right? Energy was the strongest sector yesterday. Energy prices up nearly 5%. Everything flipping around, back completely flip-flops. And these are tough markets to be involved in. And if you get lucky and you buy the dip and sell the rip, maybe that's what will be going on for a number of days. But these are still going to be very tough markets. And in the live trading room today, we had a big discussion about a number of different ways to deal with markets like this. And this type of volatility is very dangerous. And so our models have stepped to the side in this volatility, which is interesting. Some might say, oh, it got out at the low. No, it didn't. We've been actually selling for a while now, both on the short term as well as now the intermediates caught up. So we're in a very protective frame right now. And it's going to take some while to work through this. I've talked about this probably going back to 2 weeks ago on Friday, where I was talking about everything that we were watching got broken. Crude oil, the Treasury market, every trend that we were watching basically got broken. And now we're into that place where we're starting to repair and see if those trends are going to come back alive or whether they're going to be a continuation to the downside. You know, so there's plenty to talk about as we go through this week. There's not a lot of economics. I think tomorrow is a trade balance. No one cares. And consumer credit, no, I don't think that's going to have any effects at all. But we're really, there is a situation I think that is brewing over the next couple of days that could start to maybe show its ugly face, which will be remember Evergrande? Remember those guys over in China? Well, they're about to miss a major payment and default. The Chinese government lowered rates overnight by 0.5 in the triple R. And so they're starting to get a little worried. There's a lot of metrics in China that aren't looking so good. So, you know, what is it? You know, what was the dialogue around the market say? Oh, the reopened trade. And like I said, everything's going to be fine. And Omni variant isn't that big of a deal, even though we already knew that. So that is the continuation of this. We saw all 11 sectors positive yesterday. after I think 10 of 11 on Friday being negative. So that's along the lines. Financials was up 1.4, materials, tech, all these things were up. So, but once again, we're not seeing any trends emerging just yet. And I'm anxious to see, it looked like we haven't got our data yet, so I'm going to probably wait until after maybe toward the end of the broadcast tonight to bring up the data. I hate not having it. One of the things we'll find out is if there was any recovery. We were at 22% on the database yesterday on a short term, to see if there's any recovery in the database, to see if there's any kind of bid coming back in or any type of rotation. And that's what we'll be watching from here. So because of the reset in the database, and I'll talk about this at the end, but I want to mention it up front, is with a 22% long on the short-term database, a 28% long on the intermediate, just tells you that avoid volatility. And the thing we were talking about in live trading room today is the different ways to win. One is to eliminate volatility out of your trading strategy. Volatility usually equals emotion, which equals mistakes. We've all been there in some form or another, and being a discretionary trader is the hardest thing you'll ever do in life. There's a lot of things that are hard, but nothing as hard as the emotions and dealing with that type of environment on a discretionary trading environment. That's why I spent my entire career back to 1980 developing trading models and ways to eliminate any type of emotion in there, because it's the single one destroyer of equity I've ever seen in my life. You just tend to make a lot of bad decisions. So let's keep in mind and watch this Evergrande situation, see what kind of things come out of China, because all of a sudden they're getting very aggressive. What did they do? They didn't raise rates, they lowered rates. Why? Because they're seeing the economy slow down. What are they seeing? Exports slowing down. Kind of interesting, right? So while we're locked in this news stories going around the markets and people are responding, oh, it's okay, everything's going to be, and we're seeing these monster swings, and be careful. So let's go ahead and let's take a look at the charts, see how they're set up, so we can maybe set some context here. So a couple things that I will be going through tonight is trying to set up some sort of context where we are. I talked last night about that bubble formation, that volatility bubble that's happening, and it looks like we're at least going to get some consolidation. I want to continue to cover what's happening on the weekly reversal pattern, because this is perfect. So if you're going to play the weekly reversal pattern, 46.11 yesterday on the print was a good place to sell the market, to get short for the weekly, to find out if we're going to go down. I'll set up some parameters that I think are likely to get hit as we go through the week. And that we already have seen on a weekly basis. I'm going to bring this up full screen because I thought this was interesting. We were able to uncover this just in talking about it, but we look at the weekly chart here relative to the market grid. R2 weekly, 4603.75. We printed for 4611. Let's see, 11.75. And so we're definitely seeing already printing up into an R2. And from a reversal standpoint, this is probably where you get R3 is 46.38. That's a stretch, I think, folks, getting up there. And what's going to justify it? There's virtually no news coming out for the rest of the week. We've got the claims numbers, and that's for the most part. We do have CPI coming out on Friday, so there is some potential there. But like I said, we're not looking far enough back into the rearview mirror to try to get what's going on here. So let's go over to the daily chart. Let's bring up the market grid so we can just get a look at this from a daily viewpoint. There's a number of things that are coming into play here. Now the PPMs have turned up on PPM 1, but it's still a minus 0.17. PPM 2 is starting to not accelerate a lot, but it's remaining in a downtrend. So what's happening here, the moving averages are rolling over. Maybe similar to how it was back in September coming into October. We getting that what I call the volatility bubble on the market grid here where you see my cursor. And so that's something to watch. But this 10-period moving average, 4609.20, as we come into tomorrow, the high yesterday, 4611.75. We look at the market grid, R1, 4612.50, basically a retest of yesterday's high. I'm not sure we're going to be able to get there. We may be able to, but 4637 is that next level, and that just seems a little far-fetched for me at the moment. I don't see that following through, and I don't know if this Evergrande situation is going to come into play, if people are going to get nervous about that. That was a big story, as you recall, several weeks ago, and now everybody's forgot about it. So the best ways to get any kind of impact on the market is to have a story reemerge that everybody's not focused on. Instead, they're, what are they going to focus on tomorrow? If the Omni variant is already not that impactful, so no one cares about that. So what's next? What else is going to drive the algos here? And so we're seeing the futures back off a little bit. We're trading back at 45, 97.25 here. So we're up 7 handles, 96 just trade. So we're seeing some weakness come in here, but this pattern is still somewhat of a bearish pattern. I'm going to show you a chart I don't bring up a lot, and let me just bring this on screen. And I've got the short models on here, and you'll see right up at 40. Let me get the right number here. The numbers are in black, so I've got to read them off. You're never going to see them. I can't even see them. 1 second here. Looks like 46.38 was a sell signal came out of the system. We're still short this, but I want you to look at this pattern. It's a little easier to see without the market grid on it. But we're definitely getting a rolling pattern similar to the last time we got a sell signal. That looks like there's more work to be done. 46.42 in this pattern is the 21-period moving average. So, we're seeing some of these triggers come in, and they're pretty good. This choppy screen here as far as that goes, but this is at least looking like we're trying to get some type of formation. Maybe we get a rally up into these averages, and then one more low. Maybe we end up challenging that 44.94 level. But the key element, if we go back to the primary charts I show you every night, is on the weekly, and that is where we're seeing that reversal pattern. So we'll see how it all trades out. There is a potential as we look at the market grid for today. Let me bring that on screen again for you so you can see it. Like I said, looking at R1, which would be 4612. I don't see an R2, but as always, if we take out 12, then the next number is 37. It also matches up with the number on the weeklies as well. But we're going to come into these moving average, 4642 and 4601 is where the 10-period moving average is right now. So we've printed up to that level tonight. So it'll be interesting to see if there's any follow through at all, if we can get back above that number. It's trading back at 01 right now, so we're bouncing. We just traded down to 97 on the futures, back up to 01. So they're trying to try to trade through this area. It will be interesting to see if they can get that. get through that level. But like I said, it looks to me we still don't have any of the momentum switches or things of that sort, and it should cap out, if not where we're trading right now, somewhere around that, in between that R1, R2 number. And yesterday, if you recall, we had a high of 46.0650 on Friday, and we took that out. And once we took that out, it just kind of reversed back down. We traded down to 45.80. So overnight, if you're watching this, look for around 40. So far, I believe the low's been what, 80, 87. This is exactly when we were watching the markets yesterday in the live trading room, where the market was supporting, and we really haven't been able to trade below that level. So the low of tonight will be a key pivot to watch as well. If there's any weakness, we penetrate through that, then we're looking at S1 is 45.67. So that's about 20 handles under there. So expect the volatility to stay kicked up pretty good. And there's even a possibility of an S2, R2 if something gets really rolling tomorrow. Like I said, I don't see any stimulus around right now. If we were looking, for news or some kind of event other than maybe Evergrande fails, that's not going to happen tomorrow. I think their payments are due, but it looks like they're due for failure. There's 6 other real estate firms in China that looks like they're in trouble as well, and they've been under a lot of pressure. So I think the lowering of the RRR rates are going to be very interesting to watch, and maybe an international event maybe that no one's watching. I don't know. I see these things, and I look at these patterns, and like I said, probably top end of this market's maybe R2, and that should be a rejection point for a reversal back down into the pattern if we can get up there. Look at SPX very quickly for a setup. SPX has similar numbers. 46.11 is the 10-period moving average. This was what it was yesterday. It's dropping 10 handles, so it's going to be 46.01. That would be right where we're trading right now. If we were to open the cash market, we would have the numbers right at that level. We'd be roughly 10 handles higher, be right at 46.01. That's going to be a decent amount of downward pressure, 0.23. So that is going to be the pivot point. The other thing that is about to happen is we're heading toward, let me just look at something here right now, heading toward going through the 45.93 with the 10. So not tomorrow, but the next day we'll get a crossover. And as I've told you, that typically when you get that crossover will be the top, but it also starts to set up some kind of bottoming formation. And just on the weekly chart level, I just want to bring this up. On the weekly level, like I said, if you recall the outside reversal bar, we got a confirmation of a downward reversal. What perfect thing to rally up and get up to. You can see here on the market grid, R3 46.35, R2 46.01. So we actually traded above that yesterday. And so, like I said, this looks like a good point. If you wanted to play that trade, maybe you can use some options or something on SPY or something to get short on this thing. So this is, I think this pattern set up pretty well as far as it goes. We'll see how we set up going through tomorrow and coming into Wednesday's action. But like I said, there's nothing to come out other than maybe some of this news internationally. All right, let's get over to the NAS and take a look at that. From the Nasdaq, we have a decent downward pressure. If you look at the PPMs quickly here, you'll see that they're at minus 0.27 and minus 0.13 on PPM 1 and 2. So those averages, 16,066, 16,172, that's going to be major resistance there. You should be able to sell against there. And this, it's a similar pattern. It looks to me like there's a very good chance that these indicators will roll over, and there's nothing until we get onto the weekly charts to find support on the Nasdaq right now. If we stay below the 40, 15,916, which we're trading just slightly under right now, we stay under there. We look at the range for tomorrow, S1 15,746, R1 15,939. So we're just trading in between S1 and R1. We take out S1, then the next level is 15,638. So we definitely have a setup here very similar into this, and it's easy to be influenced. I talk about this a lot. It's easy to be influenced after a big up day or a down day, and then you come in the next day expecting more of the same. And this kind of pattern where we're flip-flopping, you know, we haven't seen 2 days in the same direction. Maybe we'll get it tomorrow, but I think, like I said, I think the case for that is somewhat limited, and I don't see a big reversal. Like I said, there's just nothing out there to really drive these markets either way. Now, the big move yesterday, though, as we know, was the Russell. So we did finally see a rebound in that we were getting this, that bubble pattern I showed you last night, that we're starting to see a low. PPM 1 on the Russell has penetrated its first derivative, and this is a good sign that we're trying to set up some kind of low here. If you look at what's happened, I always talk about this crossover, and the crossover of the 10 actually happened here. We're talking the last 3 days, we've been just bottoming out around this 2143 level, just below the 200. So the key level, you'll see the grid is turning up tomorrow. This is daily, is turning up. So we're starting to set up to get back toward the 2078 level, which is the 2258 level, which is the 200-day moving average. But you know, there's a lot of work to be done yet. So the party's not quite over. We're looking at the 21 rolling over. It's got a 0.40 downside. So ultimately, sometime in the next 3 or 4 days, that 21 period moving average rolling over is going to come in at least as a resistance point and possibly as a rejection point to watch for a retest of these lows down here that we printed around that 2140 level. So watch out for that. Quick look at the spread. We've got another day uptick. We're trying to get this spread to turn over. It's possible if we need to get back above this level right here around 0.147 or so, or at one point, let me get this right number here. Yeah, spread ratio 1.4784. We need to get back into this range here, but it doesn't mean that we're going to get a big turnaround. And if you notice, most of the stories that you would have run across out on the internet today, the CNBCs and Market Watch and all that, Yahoo, you name it, they're all talking about rotating into out of the growth into the value stocks, right? We went through some things. I'll just put this up on the screen here real quick. And I know you can't read this, but this is our stock screen that we supply to our software users and folks in our community. And this screen reflects that there's not a lot, there's virtually no growth at a reasonable price. The small mid cap growth is non-existent, and these screens are just set up to really not, yeah, there's just not a lot out there. So if folks are looking for cheap, that's what they're going to go for. But everybody is a trader anymore. It's hard to find an investor, and I talked about this as well today. Is I don't even know what an investor is I really am playing. I'm a trend follower for the most part, and looking at what's likely as the things that you folks see on this channel. I'm just looking for some type of trend, bottoming formation. I talk a lot about this, is that you need to have structure to be able to make a buy. We've actually got some minimum structure going in on these futures at some of these prices over the last several days, because we keep bouncing off basically that on the S&P 4,500 level, we keep bouncing off of those same levels. So it's established some support downside, about 100 handles from where we are right now, but there's still that volatility monster hanging around. I just want to flop this up real quick and see if things are running so I can get a feel for what's going on here. Wow. Yeah, we still don't. Yeah, this is very late not to have the running. So yeah, I'm not sure why we're not getting stuff. So bear with me a second, okay, folks? Just 1 second. Okay, just wanted to check out, see if I get emails from our servers that tell us when things happen. So at 6:30, the portfolio allocation started. So about 20 minutes ago. And what should happen here on this screen, yeah, just not seeing anything set up yet. So we'll have to see what comes about here. That was the last email I got from the servers at 6:30. So I'll continue on here. Okay. So here's the deal, because these servers are lagging a little bit. I've told you before, on a lot of these big days, for whatever reason, that our data service, like we didn't get, yeah, we did get our first launch at 6:04, and typically at this time, maybe things will start to set up. Everything should be on 12.6 on the portfolios, and we're not updating that just yet. So hopefully that gets run. If not, well, not sure what I'm going to do with that. Maybe I'll put the numbers out on Twitter. So if you're not following me on Twitter, do that. Twitter/portfolio expert, no E in the expert. Okay, so let's set up the rest of the show. We want to go through the Treasuries, talk a little bit more about the yield curve and what's going on there, and then we'll go through crude oil, gold, and then Bitcoin, which is actually rallying. I talked a little bit about that at the end of the live stream yesterday, the live trading room yesterday. I thought we'd see 51, maybe 52 on Bitcoin. Yeah, just one quick comment before I move on. I just saw a couple of comments here. You know, there's some reasonable noise out there. People are talking about maybe boycotting the China Olympics. Don't know if that'll happen or not. We haven't seen that for a long time. And if something like that happened, might set it up almost, I think, and probably won't happen then because everybody on the planet thinks after the Olympics are over, China's going to invade Taiwan. And I don't know that that's going to happen. We also have the Ukraine situation going on. There's a bunch of things that are trigger points for some ugly stuff. And I've talked about this since we can't get to the database at the moment. I just want to update this and we'll go ahead through the rest of the show. Hopefully it'll be ready by the time I'm done. But some of these events that are happening, I've seen this play out a lot of times. And if we go back to January of 2020 and early February, our models were acting just like they are right now. They were selling. We're reasonably close to an all-time high. Our institutional folks were, calling, sending emails. Hey, Bob, what do you think? Why are we getting so many sell orders here right now? And I was like, just a lot of mature trades. We saw the same thing happen on the database this year. We got up to almost at 85% bullish at one stage, and then we faded, and then we had that. I went through a couple things on as far as the database goes. Hopefully we'll get an earlier viewpoint of that tomorrow night, and I'll go through some of the characteristics of that as we come into that. So let's go ahead and let's dig into the crude oil here. Crude oil's up again overnight. We're seeing a move up 0.71. Something I discussed last night. We're right at that inflection resistance point right now. PPM1 is down a minus 0.96, and even though we saw a big rally yesterday and now we're seeing a follow through overnight, the PPMs are turning down. And this is not necessarily a good sign from the standpoint of crude. It looks like there should be a fair amount of resistance here. We look at the market grid for today and overnight and into tomorrow. The 70.45 is R1. We printed 70.19. We're trading 18 last, so we're trading right at the highs of the session at the moment. I would look for potential for some sort of rejection off this number. There's also a major pivot number at 73.22, so that's going to be probably a ceiling. But this downward slope 10 at 0.94 suggests we're likely to close underneath that number. So look for a move back toward maybe even 68 S1, 68.53. We've got the fast 69.91 is the 10, and the next level below that is really the 200-day, which is heading at 68.02. So there's a good chance we'll back up a little bit here. Maybe they can keep it strong. We'll see how this plays out. I just want to take a quick glance at the weekly. Looking at weekly, this is what I've been talking about, remaining between 68.40, 72.30, which is what I call the sandwich job between those two moving averages. The PPMs are down on PPM1, PPM2 is flat, PPM3 is up. So there's a fair amount of support right at that 68.40. So everything tells us that the bottom is probably around this 68.40 in this market. And I went right to crude oil and missed the Treasury. So let's go over there. Start with the weekly Treasuries, and we'll go through the yield curve as well here. So It'll help if I get the 10-year up here, not the 30. 1 second. So the 10-year is right back into that 1.42, which is the 21-period moving average. Looking at the market grid, this is weekly, 1.43, 1.48. Don't think we get above that. That's also the 40-week moving average. PPMs are negative on the top end on the PPM 1, so the major resistance around 150, 152. On the downside, we got really good support right here at the 1.42, so we rallied back into the support level. So just look for Treasuries to most likely stabilize here. I don't think there's a lot of upside yet, and whether that tells us something about what's going on with some of these other markets, it's hard to say at the moment. So let's go and take a look at the yield curve. My perspective, I still think the 1030 is still flattening, which a lot of folks don't look. As I've told you before, the 530 is one of my focus points. And if you're at a bank trading desk, you might be trading the 230s, but the 530s are way more interesting to you. And I spent a lot of years working with these folks on the bank trading side. And, we are right at that critical level. It was actually down to 0.54. We were 0.56. We're sneaking down a little bit more on this level. And we did see a little bit of a steepener when we look at this here. It kind of stabilized, was slightly up yesterday. This is a 13-week against the 10, and that's been steepening for a while. You can see the shape of this chart showing you all how it's been really going up. That's been happening for a while, but then we saw the flattener. Now we're seeing the steepener come back in. So I'm continuing to monitor that to see if there's anything we're going to be able to see from there. Next market, we've got weekly gold up here. Man, just a boring market. We moved back in the last 2 weeks. We've just been in a range. 62 low, 1762, 1811 high last week. This week, low 1776, 89 high. And the magical numbers, I've showed you a number of times on this, that all of the moving averages are virtually the same. What's interesting is they are moving up in the pattern. So PPM or 10-week moving average, 1801, 1795, 1800. So that's your breakout point. I know I'm waiting for the trolls to show up to tell me I'm wrong again so the market can move higher. But this is just a sideways consolidation. I've showed you before the monthly, which is a really bullish chart here on the monthly. This is really a strong looking chart, especially with PPMs on a monthly, on a secular basis, turning up. So the severe downside is limited on this market at this time. So we're going to go to Bitcoin, and I'm hoping that when we go back to the database, it's run, and that will be that. So Bitcoin is trading up, as I've been talking about earlier today. I know a lot of you folks didn't hear that part, but we're up. If we look at the market grid for tonight, the upper end is 51,288. We've been 51,442, so we backed off of that. But this is trying to turn up. The PPMs on the daily are turning up. And I know this chart doesn't reflect that sharp spike down. I want to do something here real quick. I'm just trying to find Yeah, I'm still not getting, this is not the right chart. I was hoping to find the right, a different chart here. So we'll go back to TradeStation, just continue on. But yeah, so this pattern is reasonably positive. We're holding right at the 200-day moving average here. So this will update in a couple hours. So we're still restricted around where we're trading right now, 50,514, 51,288. So like I said, if you were awake the other night when it spiked down, good for you if you were able to buy that crazy sell-off. I'm going to go to an hourly graph. This usually gives a pretty good perspective. It's interesting. I just want to point out something. There's been 5 cycles come in this pattern here on this hourly chart. We're still got a reasonable upslope here. PPM1 is at a 0.36. This is hourly. PPM2 at 0.17. There's a little bit of a dragon head, which suggests we might be able to get a little higher. I do have the Fibonacci targets running on here, and there are none at the moment. So, but the general slope and action that's going on in the PPM suggests we should hold above these hourly moving averages, 49,042, 49,4. We'll just run it off 49,4 to 49,000. Should be really good support down there if we trade back. But it looks like it still wants to go to about 52, 53 on the upside. All right, let's go back and check the database here and hope it's been run. No. So bad sign here. They're just now queuing up. It takes about 15 minutes from here to actually get that. What time have we got here, folks? 7:05 local. Yeah, so unfortunately, it doesn't look like I'm going to be able to cover the database tonight. I will, like I said, tweet out. I will actually send a tweet out once this thing is done so you can see the numbers. There's, yeah, it's unfortunate that this is not done. Nor, like I said, we've seen this before where our data vendor, I don't know if there's so much volume, I don't know what happens, but it seems to be on big up or down days, we tend to have a little late delivery of time. And the unfortunate part is we don't change our clocks here. And if we did, this wouldn't happen and I'd be able to cover it like I did in Arizona. We spend half of our year on Mountain Time, which we should be on all the time, and half of the year on Pacific. So Pacific works out better with the way the servers run because they run on Eastern Time. So unfortunately, we're stuck with this. I will put a tweet out. I want to thank everybody again. Hopefully you get a lot of insight out of these videos. Make sure you subscribe, hit the like button. You know the drill. Share the videos. And I appreciate everybody coming. And tomorrow's a day off from the live trading room, but we'll see all of you there on Wednesday at 1 p.m. Talk to you tomorrow night.